my daily market report. My name is Mike, and this report is about mortgage rates. We kind of cover the trend and what's going on with mortgage rates on a daily basis, what affects them, what impacts them, and which direction they're moving. Kind of give you some insight as to behind the scenes of mortgage rates. We don't get into things like rate quotes primarily because there's a lot of other sites for that. There's a lot of variables that go into rates, and we just don't like to throw those around. There's different loan programs. There's amount of equity, people's credit, property types to occupancy. A lot of different variables that go into pricing a loan, and therefore it doesn't make sense for me to. I could probably spend one whole video just going over different scenarios. So it doesn't make sense for me to cover those. But I just want to at least give you some type of synopsis as to what the market is, how the market is, how the interest rates are actually being affected by the market. Part of my blunder there. Uh, anyways, a little bit about myself. I am a loan officer. I do work at the National Lender. If you guys got questions about mortgage rates, you got questions about mortgage programs, or even looking to refinance or purchase, please feel free to reach out and let me know. If you like the video at the end, please go ahead and smash that like button. I'd greatly appreciate it. It helps out the channel. Meanwhile, why don't we just jump right into the economic report? We do have some important ones that we've been kind of waiting all week on, and today we'll start off with the inflation data. This is the main inflation data that the Fed looks at in terms of their when they talk about real inflation. It's the PCE, or personal consumption expenditure. Now, this is the headline one, which I'll touch on. Uh, Back in February, it grew only 0.2%. In March, it jumped up 0.5%. Now, its year over year jumped from 1.6 all the way to 2.3%. Now, when you strip out food and energy, that's where we get the core PC, and that's really what the Fed looks at in terms of when they talk about real inflation. So when you see that 2.5%, this is the number they're looking at in terms of the year over year. So it's month over month went from 0.1% in February. Forecast called for 0.3%, and exceeded that to 0.4%. It dropped. It went from year over year 1.4%, and came in at forecast at 1.8%. So again, this is something we'll keep our eyes on. This has been the big thing for investors to watch because it's been a catalyst of their concerns for the higher yields, and that could definitely, and with the Fed kind of sticking to its guns about employment, there's concern that inflation might get out of control, be kind of like the early '80s and stuff, where where they had to raise interest rates in double digits. It's the only time in our history, that decade, where we had double-digit interest rates. Now, to kind of go back, we got the consumer spending here for the month of March. So in February, it dropped 1%. Forecast called for 4.1%, and it came in pretty much at expectations at 4.2%. Now, on the other hand, we also got personal income. So in February, it dropped 7.1%. However, the forecast called for 20.3% and came in slightly higher at 21.1%. Obviously, great news. We all like a much higher payment there. Now, when you look at this, you can look at the employment costs went up 0.9% for the first quarter, and employment wages shot 1%. Now, this is kind of what helps exacerbate the inflation data. So, a big part of that is employment costs, and wages have gone up as a result of that, and that's also kind of pushing inflation as well. So, again, those are things we are going to keep our eyes on, and hopefully it doesn't see it go out of control. We want, obviously, it to be manageable. So let's kind of move on. Chicago PMI, this is manufacturing in the Chicago region. We had a 66.3 in the last reading back in March, and forecast called for a slight dip to 65.3. Instead of dipping, it actually went up to 72.1. So very good. We're still seeing manufacturing heating up. It's been doing extremely well of late, so those are good signs right there. Last but not least, we see consumer spending for the month of April. The previous report was at 86.5. Forecast is calling for 87.4, and it jumped up even higher to 88.3. So overall, very good economic data here. Again, the inflation data we have to kind of keep eyes on. We have to kind of also realize that these aren't the trends of 0.4 month over month. It's going to keep doing this. We do got a bottleneck in the supply chain, so we did have you know demand, high demand, low supply, and that's kind of how kind of exacerbating our inflation data. So we'll have to see if it is transitory from what the Fed says, or if it's going to be embedded into the overall picture there. So we'll have to see if it's a temporary solution or temporary problem, or if it's going to continue. So again, this is something we'll continue to monitor. Let's jump ahead to the headline news. Stocks are down this morning. Dow is down over 200 points. We are getting some good Q1 earnings reports. Overall, it's been very good, especially even the high tech has been doing quite well. Only one didn't fare as well as Twitter's the revenue hit, but their user base is down. So, but what's really affecting the stocks today, for the most part, are there's some data that came out of China and Europe that weren't so good. It wasn't like extremely poor, but like China, it dropped down. Like their PMI dropped down like 51%, like 51.9 to 51.1. Anything above 50 is still expansion, so it's still expanding. It just went the opposite direction, and that kind of soured the moods a little bit in the stock market, because we kind of look to those countries a little bit as we kind of pull ourselves out of where we are. And right now, it seems like for the most part, we are ahead of the curve for the most part. And China, of course, starting with the pandemic, started over there. They kind of look to see how they're rebounding, and kind of look, kind of compare themselves on if they're rebounding well. Hopefully, we can rebound the same way, since the pandemic kind of started over there, and probably would end much more quickly over there as well. Get through it a little bit quicker. So that's what they kind of look towards, trying a little bit. Let's take a look, see what's going on with mortgage rates. We are up about 6 basis points currently, which is good news, because as you see here, we have this trend kind of going downwards a little bit all week here, even touching out the 50-day moving average the last 2 days. But it works its way up even much higher. We end up closing the day, I believe it was 9 basis points. So, and today we're up another 6. So this is good enough to see some better pricing today. We should see some a little bit better pricing than what we saw after yesterday's close. We did have a number of lenders reprice for the better, which I indicated in my last report. That was because they were pricing way down here, and by the time we got up here, you're in double digits, and that would translate to price correction, and then pretty much equate us to about the same as what we left out the previous day on Wednesday. But today, with the combination of that continued movement upwards, as well as today's, we should see a little bit better pricing today. Now, also to note, we got the 50-day and 25-day moving average joining here. Eventually, the 25 will continue to rise, which will push this up even further. But right now, this is creating a double layer of support, which could help us out a little bit as well. So let's jump over to the yields. Yields dipped a little bit further. As you can see, it's still testing this 25-day moving average. We'll have to kind of wait and see if that translates, but it's just to round up, it'll be at 1.64. So we're still at that range right there where the 25-day moving average is. Yields haven't dropped as much as where mortgage-backed securities kind of going upwards. So again, mortgage rates should be a little bit better. That's the good thing. The good news, good takeaway to go ahead into the weekend. Again, if you guys got questions about anything regards mortgages or rates, or again different programs out there, or want to get pre-approved to buy a property or refinance, please reach out. Meanwhile, I'll see you guys on Monday's video. Thanks for watching. Bye bye.